In today's Forex forecast, we are discussing the DXY, the Euro, the Pound, the New Zealand dollar, and also gold, as we just finished up a Fed rate decision this week. Big movements here from these markets. So I'll have all the details in today's video on what to watch next week. Now, if you guys want my help with your trading, including seeing my trades live, also VIP-only videos, real-time market updates in Discord, and also full access to the course, be sure to check out the link in the description of this video for 85% off lifetime access. If you're on the website, click on that Join VIP link. All right, looking at the DXY here, US dollar index daily time frame. So what we talked about in videos this week, guys, was this area down here at 96.6. Okay, so we discussed this in recent weeks as an area where we had these poor lows down here, these unfinished auctions from back there in July. So you can see that back here off of these lows in TPO terms, what this meant back here was that based on the way the market profile looked down here, especially on the 30-minute time frame, it did look like sellers were unfinished down here in this region. And you can see where we got the market sweeping this area down here this past week with that FOMC on Wednesday. So 96.60, guys, is the area I was talking about as one to watch going into those events. And what I said there was to be careful being bearish in the US dollar because I did think buyers were going to try to defend that area. And that's exactly what we saw. Now, on the flip side, we also know that 97.7 is resistance right now for the DXY. So this is another area that we've talked about in recent videos. And you can see where so far here on Friday, we are seeing the DXY come into this area and sell off a bit here, finding sellers in this area. Now, what this is going to take, guys, it's a little bit interesting here looking at 97.7 because on the daily time frame, it doesn't look like there's a whole lot here simply because it got very choppy back in this area. However, if you look at the weekly time frame, okay, the weekly time frame is very clean here. And this is going to be key for dollar bulls because we saw the market, okay, close below this last week, right? Close below it here. And so far this week, again, the market is finding some resistance here in this area. So what this is going to take for the DXY to really climb higher in the coming weeks is going to be to see it close above here. Not necessarily this week. It doesn't have to do it this week, but you are going to need to see the DXY above here on the weekly time frame to move up here toward 98.6, that next resistance area. Okay, as long as we're below 97.7 on a weekly closing basis, then we are looking at a range-bound DXY here, really between 97.7 all the way down here toward that 2011 channel support around 96.7. All right, so you guys probably know if you've seen recent videos, but just to recap, I should have done this at the beginning, but this right here, 96.7, this area, guys, is that 2011 channel that we've discussed here many times off of these lows down here. And like I've said too, guys, for really months now, I mean, the DXY, as long as it is above this area, there's no reason to be overly bearish on the US dollar, right? You've got support down here, you've got resistance up here. So really, this is just a range-bound market. And we've seen this from the DXY before, because go back here toward the last retest and look at the similarities here in the price action, right? Monthly time frame, look at the price action back here and look at what we have right now. Okay, we have the market essentially coming down here, forming a double bottom potentially, and bouncing from this area. Same thing here over the past few months. Now, I am not saying that the DXY will do the same thing that it did back here. I don't know what's going to happen here. But what I do know is that the price action so far looks nearly identical to what we had back there in 2021. Okay, so the bottom line, guys, for the DXY here, looking at the daily time frame, you've got support down there at that 2011 channel support around 96.7 right now, and you've got 97.7 as resistance. Okay, so this is your range. If we get back above 97.7, then you're looking at 98.6. Okay, 98.6, these highs from back here. All right, so cautiously bullish on the US dollar here, but more so coming off of support. I think you've got to be careful, obviously getting too bullish on the US dollar right now while we're below 97.7. Okay, now looking at the EURUSD here on the daily time frame. Now, if you guys are enjoying this content, be sure to subscribe to the channel. Also hit that like button. These videos take a long time to make, so I always appreciate the support out there. All right, looking at, let's go to the weekly time frame here to start because this really kind of defines where the euro has been over the past few years and also what we've seen so far here in 2025, namely with these resistance areas, this resistance area up here. So this is what we've discussed in recent videos, guys. Markets love symmetry, and this is a perfect example. The same thing with the DXY, really. Like if you look at this on the monthly time frame, when I say markets love symmetry, what I mean there is that this is symmetry. You've got the lows down here, and you have what are essentially equal and opposite highs up here, where this is an equidistant channel. And the same thing for the euro. If we go over here and look at this channel, again, this is an equidistant channel. You can see the lows down here, and you got the highs up here right off of this level, okay? And this is why, too, guys, I favor channels. Like anytime you can draw a decent trend line, there's a chance that you probably also have a channel in play. So just something to keep in mind for future reference. If you're drawing a trend line that looks really well defined, again, odds are there is going to be an equal and opposite level there to form a channel instead. So it just gives you a little bit more structure to your trading. Looking at the euro, though, guys, this is the top of that channel that we just looked at. Okay, so this was the 119 area that I've discussed, all week long, really in previous weeks too, that this was going to be a big test for the euro. We talked about this going into FOMC, and you can see where the market did reject right from that area. We also talked about how 119.08, this was a big time level from 2021. And what I said before FOMC, before this high up here, I said that I wouldn't be at all surprised to see the euro sweep this area and then get rejected from it. And again, that's exactly what we saw. Now, I'm not trying to, boast here, guys, but it did play out really, really nicely from the euro rejecting from that area following FOMC. Now, the other area that we talked about, though, was this one down here at 118. And the euro so far is below this on an intraday basis. I wouldn't call Thursday's close a close below this. It was way too close to call. But if today closes below down here, then buyers face a big challenge next week because you have the euro falling below these highs. Okay, so trading back down here isn't a good look for bulls because, again, this area is going to flip to new resistance next week if we close below, which it looks like we will at this point. Now, in order to really open up lower levels, though, for the euro, and I mean, lower levels like 115.60, 114.40, to do that, in order to open up this area down here, okay, you're going to have the euro breaking below that February trend line. So you can see that over the past few weeks, this has been the level to break here for sellers. So if we see a sustained break below here, doesn't have to happen today, could happen next week. But if we get the break below here, then this up here becomes essentially just a sweep of these highs. And you're looking at that push down here toward poor lows like this around 115.64 and potentially 114.40. Okay, so 1.1564, 1.1440. All right, so that's what you're looking at there. If we get below this 1.1730 area, this is the level to break now. This is the support level that I've just talked about all week here for the euro. And you can see where so far on Friday, it is serving as key support. Okay, so that is going to be a big test there for sellers. I mean, right now, again, buyers are defending this, but all in all, it's starting to look a little top heavy here for the euro with that close back below this 1.18 area, right? Closing back below these highs back here would not be a great look. But again, I think if you're looking for kind of the big short here, so to speak, right? Not referring to the movie, but the big short here for the euro would be the close below that February trend line around 117.30, okay? Obviously, if we get back above 118, then you're looking at a pushback there toward 1.19. Looking at the pound next, guys, this is also a perfect example of why I have started to love TPO, time price opportunity, because it does map out these single prints and poor highs and poor lows. And we've talked about this all week long. We've talked about this for weeks now, in fact. Even when the pound was back here, I was talking about these single prints up here potentially serving as a magnet. And it's fitting that we saw the pound take this out during FOMC. Okay, so with that Wednesday volatility, we got the market coming up here and taking out each one of these. So the top one here, 137.30 or thereabouts, this high right here was 137.27. So literally 3 pips away from this area up here. And the video I made, guys, before FOMC too, if you watch that, I said that these levels up here would not only serve as a magnet for this market potentially, but also as key resistance. And you can see where, obviously that was kind of the rejection point here for the pound. Now, going into next week, what are we looking for here from this market? So first of all, it's obviously looking a lot more weak than the euro, right? We know that because at the moment, the market is falling back below these highs. And so that right there is a bearish look in and of itself here for the pound. Now, you've got this area down here. This was a poor low that got taken out here on Friday. So what's going to be key is, do we see the market recover some next week? Because keep in mind that if we look at, let's go to the 30-minute time frame, and I'll show you exactly how this lines up here in TPO terms. So looking at TPO, right? Ignore the blocks, guys. We're not talking about that right now. What I want to focus on is this single print up here and also this one, especially this one here at 135.30 or so. 135.29, that single print right there, guys, could come into play early next week. Because again, these areas do tend to serve as magnets for a market when you get these sharp moves out of congestion like this. So if I turn this off, let's clean this up. I'll show you exactly what happened here. We had this range that built up for the pound, okay? This right here is an expansion out of that range, and you have this imbalance back here at 135.29, okay? So that right there probably serves as a target early next week, okay? Monday, Tuesday, Wednesday, sometime like that. Get a move up here into resistance, and then from there, potentially, we get that sell-off here from the pound to move toward lower levels, because again, keep in mind, that's the 30-minute time frame. The daily is showing you that the market is once again trading back below this key area, okay? So it's failed to hold above this now. So you've got this single print here. You also have one up here at 135.74 to be aware of as well. So essentially, this entire pocket up here, guys, is going to be resistance now for the pound. Now, you've got this poor low down here at 134.18, and then, of course, lows like this down here around 1.333. Okay, so that's going to be what to watch here on the pound, guys. Again, resistance up here in this area. I do like fading strength if we get a push up here early next week. I do like the idea of looking for shorts there. However, one thing you've got to be careful of, though, and this applies for the pound and the euro or any major currency pair, is that if we do get that, then you have to pay attention to the dollar here, the DXY, because you need it above 97.7. Okay, you need it above 97.7 to really indicate that the pound is going to move toward lower levels. Okay, because without the DXY reclaiming levels like 97.7, then obviously you're going to have limited downside for things like the pound. Okay, so that's what to watch there on the New Zealand dollar, guys. This is something that I discussed several weeks ago, and this right here is my bread and butter trading style. Okay, so this is what I teach in VIP. This right here is a failed breakout. Now, technically, you could call this really, this breakout, did it fail? It did this week, but if you look here, you got the breakout here, you had a retest, and then the market actually came up here and swept this high. So it was a pretty decent move before we got that failure. So, whether or not you want to call it an actual failed breakout or just a breakout that eventually failed, it's up to you. But the bottom line here is for the New Zealand dollar, you have this key area right down here. So off of these highs through here, you've got these lows around 58.18 or so coming into play following this failed breakout. Now, why is this a failed breakout? Because you had the New Zealand dollar forming this really well-defined descending channel, okay? Now, we had the breakout back here a couple weeks ago, and you can see where we got the run-up. We took out this high, and then this past week on Thursday, we had the close back below. Okay, so the fact that buyers were not able to hold the market above here and close back below, look what became resistance here on Friday. So this right here, this setup, right? The breakout back here, the sustained break above, the failure back below on the high time frames. This right here is a bearish pattern, okay? Now, obviously no guarantees. There are never any guarantees, but for the New Zealand dollar right now, it does look relatively bearish. Okay, so if this holds up, guys, you've got resistance up here around 0.5880, and then obviously support down here around 58.18. So looking at this market, you've got resistance, you got support down here. Now, if we get below this area, below these lows next week, then you're looking at a push to the bottom of this channel. Okay, so typically that's what you tend to get with a fake out like this. If this holds up, you tend to get the market extending it in the opposite direction, for an extended move, right? It's not just a matter of coming down here and then bouncing. That could happen, but typically what you get from this is you get that extended move in the opposite direction. Okay, we're talking down here in this area. Now, for the New Zealand dollar, this is interesting because keep in mind that back here, going all the way back here to April, this was an incredibly aggressive rally from this market, okay? And what you'll notice here is that there was no pullback really. It was just candle after candle, day after day of the market closing and then moving up, closing, moving up. So there was no pullback into this space. And this creates this massive imbalance down here in this area. Now, there is a single print at 0.56. This right here could serve as a magnet if we get that extended move lower over the coming weeks. Now, just keep in mind, though, that even though this is the single print in TPO terms, right? Again, this entire block down here is going to be an imbalance for the New Zealand dollar. And that alone could draw this market lower, but only if the DXY gets above 97.7. Remember, we have to tie all of this back to the DXY and this level here at 97.7. Okay, especially on the weekly time frame, right? As I said, the market has to get above here to really, extend the dollar higher and push markets like the New Zealand dollar lower. Okay, so just keep that in mind that you do need that in tandem, right? That kind of pairing here with the DXY reclaiming 97.7 and also this market falling below levels like this. But all in all, right now, guys, this looks pretty bearish here from the New Zealand dollar. potentially targeting the bottom of this channel and maybe even areas like 0.56 over the coming weeks. All right, now obviously, one thing too, guys, before we move on, if the market were to reclaim this, so if next week we were to get the market closing back above here on the daily time frame, then that negates this idea of a bearish move. Okay, so let's move along now to gold here, XAUUSD. And this should be pretty quick, guys, because obviously a very bullish market. As I've said recently, this is not a market you want to fade, at least in my opinion. And I also mentioned 3,700 last week. So right now with this market, essentially in blue sky breakout mode, right? All-time highs here for gold this past week. You don't want to try to fade this market, and you've also got to be careful trying to identify key levels that aren't there. And what I mean by that is that we have no resistance up here based on history. Okay, so what you have to do is you kind of have to look at psychological levels, like what I mentioned in last weekend's forecast. 3,700 was likely to be resistance. It was this past week, and above that is 3,800. Okay, so no guarantees that this holds up or that we get the break above here. But if we do get the break above these highs, chances are that's going to flip to support, and then 3,800 would be my next target. Now, as far as support, okay, will we get a pullback or a deeper pullback here from gold? And honestly, it's kind of looking like we won't, even though the US dollar is looking stronger. I mean, gold has just been incredibly strong here over the past few weeks, to the point that, we have these single prints down here. And this is what I was looking for. I was hoping for really a sweep of this low down here to get in for a potential buy. And we didn't even get a move that low. And here on Friday, we're rallying once again, looking pretty strong. Okay, so I mean, to me, guys, it looks like this is a market that just kind of wants to continue grinding higher, right? And I could be wrong there. We could get a pullback, but I would not be banking on it. If we were to get a pullback, though, into this area next week, I think that that's a buy, right? In my opinion, that would be a buy. Really anywhere down here in this area. But again, I'm not convinced that we're going to get that based on the look of this market. Instead, what you could look for is a sustained break above these highs up here, the target 3,800, okay? Now, one thing to keep in mind, and we'll wrap up here, but over the coming weeks, we're not really too close to it now, but just keep an eye on this weekly channel, okay? This channel right here is being respected on a weekly closing basis, and what you'll notice is that the closing prices through here were right off this level. Now, at the moment, this does come in pretty close to 3,800. So I do think that this area over the coming weeks is one you've got to pay attention to, because this is where sellers could really be camping out, okay? So if we are going to get a deeper pullback from gold, it could happen up here in this area over the coming weeks. Obviously, no guarantee, but this is the area I'd pay attention to, through the end of September, really into October. All right, guys, so that's it right now. I mean, we did see some nice moves out here this past week with FOMC, but right now markets are still relatively range bound. The euro, if it gets below here, guys, I think we've got a really nice setup on our hands. And with the DXY, again, pay attention to 97.7, especially as we go into this week's close. This video is being made with a few hours left in the day, so we could get the market closing above here. But really, that's going to be the key, guys, over the coming days and weeks for the US dollar to continue to strengthen. As of right now, it is a range-bound market, but just be really careful, guys, like I said, of getting too bearish on the US dollar as it's coming off of that 2011 channel support. All right, guys, I hope the video has helped. If it has, be sure to subscribe to the channel, hit that like button. Also, join us in VIP. Check out the link in the description of this video for 85% off lifetime access. Have a great weekend, and I will talk to you again on Monday.